Hello traders, this is binaryoptions.net.au and today we're going to teach you how to trade with the Bollinger Bands. But first of all, let's go through what the Bollinger Bands are. Bollinger Bands consist of a middle band with two outer bands. The middle band is a simple moving average that usually comes with a 20 period by default. The upper and lower band are usually set to two standard deviations above and below the moving average. And remember that standard deviation is a mathematical calculation that measures volatility. So, this indicator is used as a volatility indicator first. When the bands are contracting, volatility is drying out. This means that when the bands are close to each other, price action is more than likely to be very choppy and in a narrow range. But when the bands are expanding, volatility is picking up, meaning that price is actually moving and we can make money out of those moves, because remember guys that as traders we profit from big moves in price. And there's four ways to use the Bollinger Bands to trade binary options. The first one is the simple overbought and oversold signals in ranging markets. The second one are reversal trades. The third one is the Bollinger Band squeeze. And the fourth one, and most powerful one, is the Bollinger Band squeeze with a failout to break the previous high or the previous low. Now, why don't we go to the charts and look at some examples of these setups so you can better visualize what we're talking about here. Okay guys, so this is the GBP USD 15-minute chart, and right now we're going to go through the first setup that we can find using the Bollinger Bands. But first of all, I'm going to show you how to plug the Bollinger Bands into your charts. If you are using the MetaTrader 4 platform, as I am, you go to this plus button. This plus button is the button that you click when you want to add an indicator. You click on the plus button, you go to trends, and then you set Bollinger Bands. As you can see, the default period is 20 period for the simple moving average, and the default standard deviation is 2. We're going to use this default period and deviation for our Bollinger Bands trading. Now you just click accept, and there you go. This is how the Bollinger Bands look like. I know it looks like kind of messy, but once you understand how you trade with them, you're going to see how helpful they are. Now the first setup that you are going to be looking for if we are in a ranging market are the overbought and oversold signals. Now, an oversold signal is when price comes all the way down to the lower band, closes at the exterior of the band, and then we have a bullish engulfing candle. Now let me just insert a rectangle so you can better understand and better watch what I am talking about. Now this is a oversold signal. So when the price comes all the way down, closes at the exterior of the band, and then we have a bullish engulfing candle, we have a signal to buy calls on whatever instrument you are trading, in this case the GBP USD. If we had we been trading this currency pair at this time, we would have ended up in the money with this binary option or this call option, because by analyzing price action in the 15-minute chart, you can choose to trade the hourly or the 2-hour expiration option that would have expired in the money. Now this is a signal to buy calls when we are trading in a range. A signal to buy puts is the other way around. Price needs to close or spike above or at the exterior of the upper band, and then we need a bearish engulfing candle for the setup to be authentic and for us to be able to trade the setup. Because if you see right here, we have a spike high, a close above, but this candle does not engulf this the blue candle, so this is not a valid setup to buy puts. We have to be disciplined when we do this. So a valid setup would be here. We have a spike high above the upper or at the exterior of the Bollinger Bands on the upper side. Then we have a huge engulfing candle, and this is a valid setup to buy puts. If we are analyzing price action on the 50-minute chart, of course we choose an hourly or a 2-hour expiration option that would have ended up in the money, because our entry is right here. And if we can 4 candles for 1 hour and then another 4 candles for the 2-hour expiration option, even an end of day expiration option would have ended up in the money. Now you need to look for valid setups, and if you look closely, we have another setup to buy calls using the simple overbought and oversold and overbought signals with the Bollinger Bands. We have a spike low and a close below the lower band, and then we have a bullish engulfing candle giving us a clear signal to buy calls on the GBP USD. Now this is basically how you trade the overbought and oversold signals using the Bollinger Bands, but this is not the only setup you will be looking for. Now we're going to go and find squeeze trades. Now let's go and look at the Aussie US dollar 5-minute chart. Okay, this is the Aussie US dollar 5-minute chart, and we are going to go through the Bollinger Band squeeze. Now the Bollinger Band squeeze is when you look for when you are trading a trending market. Okay, and once you are familiar with what trend following trading really means, you can actually use this setup. Now let's get to it. First of all, let's plug in the Bollinger Bands into this chart. Now the first thing we want to look at is the actual trend, and as you can see, the middle band or the moving average is it's moving up, so the actual trend is up. This means that we are only going to look to buy calls in this currency pair on this session. Now the second thing we want to do is to locate the Bollinger Band squeezes. Now where are these squeezes located? As you can see here, when price moves all the way from this low to this high, the bands are expanding, and then we have a squeeze. Now let's put in some rectangles where the squeezes happen. We have one squeeze here, but this squeeze is really small, so I don't think we can actually get a signal out of it. But let's go and look for another squeeze. Okay, now we have a second squeeze right here when price starts to correct to the downside. Okay, and we have a third squeeze right here. Now the actual signal to play the squeeze is this one. Okay, price is moving up. Okay, we are in an uptrend, and when price starts to consolidate and the Bollinger Bands are contracting, you look for a close or a takeout of the previous swing high. What does this mean? Okay, we are trading up, then we start to correct, or we start to trade in a narrow range. This makes the Bollinger Bands contract, and here you can see that we are making lower highs. This means that we are in a correction of the main move, and when we have a Bollinger Band, when price crosses above the moving average again and closes above this high right here, we have a trigger to buy calls on this currency pair, And had we been trading um, this currency pair on the 5-minute chart, we could have traded a 15-minute call option, a 15-minute expiration call option that would have ended up in the money. So this is how you play the Bollinger Band squeeze, whether you're in an uptrend or in a downtrend. Remember that if you are in a downtrend, you will be looking for a close below the previous swing low. In an uptrend, you will look for a close above the previous swing high inside the squeeze, and this is where you get your signals. And now we're going to look for the third actual setup that you can have using the Bollinger Band squeeze. And this setup actually uses the Bollinger Band squeeze in confluence with swing highs and lows and previous zones of support and resistance. If we go back to the GBP USD chart, I can show you exactly what I mean. Let me get rid of these triangles so you can, because these triangles are were used to explain the simple overbought and oversold signals. But here we also have what we call a Bollinger Band squeeze with a fail to break the previous high or the previous low. This is a very powerful signal. Now let me explain this to you. Here we have a trending market to the upside, or we have a swing high, okay? And after the swing high, we have a Bollinger Band squeeze, okay? When we have a spike high, or when we have a signal that the bands are in fact expanding, and we have a failure to break the previous high, we wait for a break below the area of the actual squeeze. Now, what am I talking about, the area of the actual squeeze? Let me explain this to you. When we have a swing high and then a Bollinger Band squeeze and a failure to break the previous high, and then we break with the low of the squeeze, we have a signal to buy puts on this currency pair. Now, the actual entry on this signal will be right here when we come back and test this area of previous support as resistance. Okay, now we are using support and resistance, swing highs and swing lows, and Bollinger Band squeeze to trade a put option that would have ended up in the money in this case. And of course, if we are in the opposite side and we have a swing low, then a squeeze, and then a failure to break that swing low, we are going to buy calls on the break above the on the break above the area of resistance of the squeeze. I hope this was educational to you, and I'll see you guys on the next lesson.